Less stress, more time, more money. Welcome to the Cashflow Contractor Deep Dive.
Welcome to the Cashflow Contractor, Martin.
Thank you, sir. Welcome back at you.
I'm looking at our notes right here. It says banter right here at the top. So
Right. Mine doesn't say that. So,
well, I guess I'll lead us then here.
yeah.
I know that you're upset today because I have printed double-sided for our notes,
Which
to
is
save us a sheet
flashing
of
the
paper.
camera when because otherwise we could subtly just push them to the side and nobody would even know we're reading.
But now they're gonna know.
Now they're going to know.
Now they're gonna know.
I'm not going to pay any attention to it anyway.
Hey, how'd you handle the Snowmageddon?
Snowmageddon.
Of
Well, it was
2021?
interesting because I did the math night before last. The lowest I saw at my house was minus 17 Fahrenheit. And that day when I did the math, it was plus 73. So that's 90 degrees in 6 days difference. So, and today we've got a pollen alert, so my nose is stuffed. Last week you worried about slipping on the ice. So break your nose instead of stuff
Did your
it
pool
up.
do okay?
Froze 4 inches, man.
4 inches.
4 inches.
Could you stand on it?
Oh, I got ice. I did.
You did?
I escaped laps around it. No, I was really puckered up there for a while because it's first year with the pool. And you have two strategies on winterizing a pool. You drain the pipes and the pumps and the filters and all that and cover your pool and then treat the green water in the spring. Or you leave it running so it circulates. And as long as it circulates, you're good. Well, 17 below, that wasn't in the manual. But it did fine. But then we had a power outage, so I ran out there and drained everything. Turned out that takes about 10 minutes. So it's like nothing.
Really?
Yeah. And then...
so you were okay? Your pipe didn't,
Oh,
your
yeah. No,
pump didn't freeze?
No, nothing broke. One of the things, the ice forming presses out, right?
Mm-hmm.
Did you know that?
Yeah. So
Ice expands by 1/11th.
yeah, did it mess up your concrete?
No. But I was
You were worried?
kind of, well, I called a few guys. They said, no, don't worry about it.
Yeah.
If you have a liner pool or if you had an above ground pool and you didn't do anything, you don't have an above ground pool anymore. So pretty unusual.
I was talking to a pool builder yesterday, actually, and hopefully we'll get to bring him on, but he was talking about some of his pools that he just did in the past year, trying to help people during this storm.
Yeah.
No, here in
Texas or
here in Oklahoma. And man, one of them, these are really high-end pools, and they've got glass infinity
edges
gold
on
edges, those kind of things. And one guy was trying to go break up the ice on the pool.
Smashed.
Started breaking
Broke
about
right through the glass.
100 square feet of glass shards all over the pool.
Oh, couldn't tell the difference between ice and glass.
Yeah, it's crazy. So fun times.
Some people shouldn't have pools.
Well, if we're going to try to make a segment, I love trying to do this. We're talking about the statement of cash flows today.
Ooh, flow.
And if
If
you don't have a flow in your pool, it's going to freeze. It's going to break.
You don't have cash flow.
And you're going to try to fix it. And really what you're going to be doing, if you don't really look at your statement of cash flows or have a statement of cash flows, is you're really just going to be breaking the glass.
Oh, man. There's a better one sitting there.
What is it? Let's hear it.
Well, you call cash in business liquidity.
Ah.
Get it?
That's good. You're frozen.
Yeah.
You have zero liquidity.
Frozen assets.
Frozen assets.
Yeah. There you go.
There you go. So we've done this series. I'm actually really excited for this series to conclude. I think it's been good, but it's a stretch for me, obviously. You have so much more experience with financial statements, and I'm lucky enough to get to sit across from you and learn and ask questions. So this one by far is the one that I have the least amount of knowledge on, and I'm excited to talk about statement of cash flows. But so far we've covered an overview of how to use financial statements. And then we've gone through the income statement or the P&L, the profit and loss statement. Right. Our last episode was the balance sheet. And now we're going over the statement of cash flows. There's 6 questions for this series that we're trying to answer, really 5. And then the 6th is what we really have tried to cover in the episodes. And those 5 questions are, am I making money? What do I own? What do I owe? What's left over for me? and where did my cash go?
Right.
That last question is, what should I do now with all that information? So with all that being said, let's do a little bit of an overview of the statement of cash flows. What is the statement of cash flows?
Well, let me jump back a little bit and ask listeners, what are you thinking about right now? And it might be some project or something like that. It's very likely you're thinking about your cash.
Yep.
Right? And one thing I point out to people is that cash and profit, cash flow, which means the ebb and flow, the ins and outs of money, it means what it sounds. Ooh, swimming pool.
Swimming pool.
It means what it sounds like. I've had people really confused about what's cash flow mean. It just means the money that's coming in and going out of your business, right? But cash flow and profit are equally important, but they're not the same thing. They affect each other, but it's possible to make a profit and not have any money, which is the subtitle of my book. They say I make money, so why don't I have any?
Yeah.
Bring that up. But it's possible to make money and not have any cash. And it's also possible to have cash and not be making any money.
Yeah, and there's 3 reasons that you like to talk about where if you have a profit but no cash, what are those 3 reasons?
There are only 3 reasons, and they are: 1, you haven't been paid yet. In other words, you make a profit because you had $1 million sale, but the contractor, the GC, hasn't paid you yet. Mm-hmm. So that's number 1. You haven't been paid yet. Number 2, you already spent the money buying assets or paying down debt. Okay, the assets and debt are not part of a profit and loss. So you could make a bunch of money, but buy a bunch of inventory or buy a new truck or buy new equipment or buy real estate, not have any. So you've either haven't been paid yet, you already spent the money paying off debt or buying assets, or the third one is you took it. The money that you take out of your business, not as a salary, but as draws, as distributions, does not show up on the P&L, so that could be where your money went.
Right.
And that kind of simplifies things because there are lots of particulars among all those things.
Yeah.
You can have credit card debt and bank debt and debt on real estate and equipment, but there are really only those 3 reasons.
Right. And we've covered some of this stuff in the past. With receivables, we had a whole episode with Janet Reeves, who wrote the book Get Paid, with all these different strategies of lowering your receivables, of getting paid faster and on time by your customers. Because the reality is, if you're not getting paid by your customers on time, then you're lending money to your customers,
right,
and usually without an interest rate or anything like that.
And the great irony of that is you probably have money borrowed from your bank. So if you think about it, what you've done is borrowed money from the bank and are guaranteeing it and then lend it to your customers, hoping that they'll pay you.
Yeah, it's not good. All right, so there's also the flip side to that where you have cash, but you might not necessarily be profitable.
Right.
So how does that happen?
Well, it's just the opposite of those 3 reasons. So I said that you might not have money because you've loaned it to your customers, but what will happen on occasion is that you're losing money this year, in let's say March of this year, but you collected a bunch of receivables from last year. So you might have made money last year, but the money coming in now is not from making a profit, it's collecting old receivables. It could be that you borrowed more money from a bank or a credit card, something, credit card company like that. So you're losing money, but you have cash in your bank because you haven't paid your credit card, or you haven't paid your vendors or your suppliers, or you haven't made your bank payments yet. And then the third opposite reason is that you might have put more money into your business than you took out. And people generally are aware of that because they have to do something, but it's just the same 3 reasons working in reverse.
Gotcha.
And the difficulty is for somebody driving around doing the mental gymnastics is it's combinations of all those things.
It's not just
some
one.
people have paid you more than they borrowed, but you have new receivables. So you got all kinds of things. People who've paid you, people who haven't paid you, retainages that are going to be out there and will continue to be out there for another 6 or 8 months.
Yeah.
You have all kinds of things, assets that you buy. You might buy equipment. You might have paid off a piece of equipment. You might have sold a piece of equipment. You might have bought new property and had to put a big down payment on it, and then borrowed from the bank. So there's money coming in to borrow to buy that real estate, but you spent $75,000 as a down payment, but you borrowed $1 million. Anyway, so
It gets complicated really fast.
You can't do it.
Yeah.
One person, one household, the equivalent of a household business, might be able to do it, but you just can't do it. There are ins and outs and ups and downs, and it's just flowing all the time, cash flow, and you just can't keep it straight in your head.
Yeah.
Even if you could, it's a waste of your resources trying to keep your brain focused in on all those things. And, ooh, I forgot. Or, oh, yeah, that's cool. That's coming in. Oh, crap, payroll's Friday, right?
Yeah. I mean, I think there's some good examples of this. We had a really great episode with Sergio Garcia of Alpha Services, who talked about whenever he first started running the company, he would literally just look at their cash balance, what was in their bank account on Fridays. And then they would say, okay, let's split it between me, dad, and brother, and we'll go home. And they'd empty out the cash balance. Or we'll keep $1,000 in there or something like that. Yeah. And then they would end up having all these payables. And so they would think that they're profitable, but really they just had some cash that belonged in a lot of different places. So misuse of the money. The other thing that I think is really pertinent right now for a lot of people is they think that they're profitable because they have cash, but really that cash is coming from PPP and, the EIDL stuff. And the reality is they actually could be losing money right now. But
that happened yesterday.
Yeah.
With a client when we looked.
And then you brought up a good point when we were prepping for this about collecting old receivables. How does that factor into things? What does that look like?
Well, let's say you have a retainage that's been out there for a year, significant, a couple of $100,000 or something like that. But your year ended on December 31st, and you start a new set of books, profit and loss. Well, you start to collect the receivables from last year.
Yeah.
So money's coming in, you're feeling really, really good about it.
Yeah.
And the reason that you need to understand where the money came from is obviously if you don't have it, you have to do something about it to improve your collections or buy less inventory or take fewer draws, whatever it is to correct the problem. But the other side of it is if you have an abundance of money, you wake up and look at your phone app and there's another 100,000 in your account that, wow, that's cool.
Yeah.
You'll spend it.
Yep.
I mean, there are mature among us who don't, but a lot of us do.
Mm-hmm.
And yet that Platinum F-150 you've been looking at, that's $104,000 and you really need it. You got to have it because it projects the image of your company, and then you go buy the stupid thing and realize hadn't paid your credit cards, hadn't paid the payroll taxes. Anyway, just lots of things start flooding in and you regret it later on. So you really need to understand at all times where your cash is coming from and where it's going.
Yeah. And
not with ambiguity, with certainty.
Certainty, for sure. Okay, so we have a pretty good overview, but there's a really good, because we're talking about the statement of cash flows, we need to understand how important cash is. And I know we've talked about this in the past, how a lot of contractors will focus on getting the sale, getting the job. But why is the cash aspect so important? Not just the profitability, but the cash.
Well, there's a great quote that says, if sales and profit were food and water, cash would be oxygen.
Mm-hmm.
So you can be making millions of dollars in money that you haven't received from the GC who's not paid you yet, and you can't make payroll Friday. Well, you're done.
Yep.
Or you can't make a payroll tax deposit, and the IRS sends you one of those little letters that said, hey, we're going to come, or they don't even send you the letter. They just go seize your account.
Yep.
And all of a sudden, and you're done.
Mm-hmm.
That's when the sharks start circling too. If you think people won't pay you before you have trouble, wait till they find out the IRS or some lien holders out. Then anyway, that's a whole nother story.
Yeah, going back to the pool analogy, I mean, a pool with a broken pump and frozen 4 inches on top, you can't swim in it.
Right.
And it's because it's not liquid. It's solid. Same thing. If you don't have cash, if you don't have liquidity, to some respect, you can't do business. You're just not going to exist.
I wrote a poem.
Oh yeah, let's hear it.
Do you think I can remember it? I think I can. It's called A Promise to Pay. It's in the front of my book, but it said, we toasted the sale as our most profitable to date. It was packaged and shipped. We even prepaid the freight. We'd burned through our cash to reach that day, but we weren't worried because they promised to pay. We imagined ourselves smoking fat cigars and paying off debt and buying new cars, but our dreams had to wait for another day because we couldn't spend the promise to pay. And anyway, I won't do the whole thing, but it's called you can't spend a promise to pay, and that's what it takes cash. Even in the day of electronic transfers and all that kind of stuff, it still comes down to you have the little digits in your bank account that'll go over and fill up that guy's bank account. You have to have cash.
Have to have cash. So we understand the importance of cash. We understand where cash goes, how it's spent. What is the statement of cash flows in a nutshell? I mean, these are financial statements. I doubt many contractors are looking at these too frequently. Probably statement of cash flows is one of the harder ones to look at because you have to have everything in order to be able to actually use the statement of cash flow as well, right?
And it's confusing. I've said often that everybody understands the need to compare income and outflow, income and expense. They might mess up some of the procedures, but everybody gets that.
Yeah.
I think a 3-year-old kid understands that.
Yeah.
What's coming in, what goes out. So it's intuitive. The balance sheet's less so, but it's pretty easy to understand because it's the things I owe. What do I own? What do I owe? And the difference between the two is what's left over for me. The statement of cash flows is not at all intuitive.
Yeah.
And it's probably no longer true. I'm sure I've met somebody, but I said for a long time I'd never even I had never met a business owner who had even heard of the statement of cash flow, let alone knew how to use it. And yet it's the question. It's the question on. In my experience, I think if you're just talking to business people, the first thing that'll come out of their mouth is sales. Am I selling anything? Second thing that comes out of their mouth is they'll talk about cash, right?
Yeah.
And so it's the balance sheet and those things are kind of academic over there. They're just worried about, am I selling and do I have cash?
Right.
Profits even later down the line. But very few people understand the flow of cash in and out of their business. And it's a shame because the statement of cash flows, those 3 reasons, you haven't been paid yet, you already spent it buying assets or paying debt, or you took it. Lots of combinations of those. This statement of cash flows shows you exactly where your money went. And it's a period statement, meaning it has a beginning date and an end date. So it's showing you where your money went between January 1st of 2020 and December 31st of 2020, or January 1st of 2021 and whatever today is.
Right.
Anyway, between any 2 days. It's not at all intuitive when you look at it, and because I've tried to explain it to many people over the years, and including myself, trying to understand it. Once you get it, it's like slap your head, duh.
Easy.
But until you get it,
Yeah.
it's like, what the hell,
Yeah. What am I looking at? So it's a period statement. We can use it between 2 dates. It's probably helpful for us to look at this not just on an annual basis and not just on a monthly basis, but even quarterly. And we may not just compare year to year, month to month, but look at rolling periods because your cash isn't coming in necessarily on the same day.
Anytime you're concerned about cash, which is a lot, it can be over a weekend. I had an example, and we didn't talk about this beforehand, but a company I had that had 3 owners. 2 were on the same page, 1 wasn't.
Yeah.
And so we went in, and when I was talking to them, they had about $500,000 in cash, and everything was great. On one Friday meeting, I went into the next Friday's meeting, and there was disaster, pending doom. We can't pay our bills. And so what the hell happened?
Yeah.
What's going on? And the guy who was not on the same page had actually gone out and bought a company, and he wrote a check, and that check just annihilated their cash. And so I said, well, you bought a company, that's what did it. He said, that's not the reason. That's not the reason.
Yeah.
Well, print out a statement of cash flows, which we did, and it was very obviously the reason because it showed exactly that this acquisition had consumed a big chunk of their cash.
Yeah.
So anytime you're wondering where your cash went, you can print one out and look at it.
Yeah.
And you don't need to fully understand it Matter of fact, it's not at all necessary that you completely understand it to
Yeah.
use it.
Well, cue the firefighters.
Yeah.
Hope they're helping somebody. So let's talk about the layout of the report. And I know that people will have an example statement of cash flows in the show notes for people to look at so they can understand the flow of it. But what's at the very top? And let's just walk down bottom.
Well,
top to
first of
bottom.
all, you can print one on QuickBooks.
Mhm.
You have to be on accrual basis. I don't know if we mentioned that or not. But
Yeah, you have to be on a accrual basis, and you have to have everything in order, especially your balance sheet.
Right. And the reason for that, just touched right on one, is if you have a lot of accounts receivable, which affect your cash, those are on the balance sheet.
Mhm.
So, and they're accrual basis, right? Because if you're cash basis, you ignore them. And if you're accrual, you include them. Because they affect your cash, you have to be on the accrual basis.
Yeah.
But you don't need to worry about that. It just needs to be clicked on accrual basis. You can find statement of cash flows down in the bottom of a list of reports, or just have your accountant do it for you. But when you print it off, you have to select 2 dates. So let's say we're looking at last year, January 1st of 2020 to December 31st of 2020. So you set the 2 dates and click go, and it will produce a report. The top line is going to be the beginning balance of your cash, which makes total sense,
Yeah,
right?
so
That's where you start.
Yeah.
You add or subtract your profit and loss. So I made money or I lost money. And then following that are a whole lot of positive and negative numbers with words next to it, names of accounts next to it.
Right.
And at the bottom is the net result of adding or subtracting all those numbers together in it. So it's your ending balance. So beginning balance plus profit or loss plus a whole bunch of numbers that reflect changes.
And those numbers are either negative or positive.
Right. And negative means, in the vernacular of cash flow, that item consumed cash,
Mm-hmm.
used cash. Positive means that provided
Gained
cash.
cash, yeah.
Right. So, for example, if you got a bank loan for $100,000, it would have,
Cash.
but in that period,
Yeah.
it would be a positive 100.
Right.
If you use 75,000 of that, or the 100,000 of it to buy that platinum truck,
Yeah.
next to truck asset, it would be a minus 100,000.
Yeah.
And you could look immediately and see, oh, I got plus 100,000. That's that bank loan. Makes sense.
Mm-hmm.
Minus 100,000. Oh yeah, I bought that truck. Makes sense. Wish I hadn't done it. Right.
Yeah. And so it's really important to note 2 things. One, if your books aren't right, this is going to just be a nightmare and it's not even worth looking at. Is that right?
Yeah.
Okay.
Yeah.
So before you even think about going and looking at the statement of cash flows, make sure that you have good books. Make sure that you have a balance sheet that's accurate, that all of your receivables are in there, and make sure that you're also aware of the period, because that's going to have a huge effect if you're thinking that you're looking at the full year, but you're just looking at, the 2 quarters or up year to date. You're going to be freaking out. Right. Then the next thing is that, where are my notes here? Oh, these are changes, not balances.
Right. Yeah, let me say one thing before we do that. The reason to understand in sufficient detail where your cash went and where it comes from is that if you know that, you can do something about it. If every morning is a surprise, what are you going to do if you don't like it? You don't know, because you know specifically where the cash came from or when. So back to the report itself, yes, we said that there's your beginning balance, the profit, the gain or loss from a profit or loss,
Mm-hmm.
all these numbers that are pluses or minus, all added together give you an ending balance, just like a bank statement.
Yeah.
My beginning balance, my deposits, my withdrawals, ending balance. The thing to understand, the number one thing that will confuse people when you look at a statement of cash flows, and this would be a very common one. There will be something like accounts receivable,
Mm-hmm.
and it will say minus 200,000 next to it. To keep people looking at it and go, well, my receivables aren't minus 200,000, they're plus 700,000. How can that be? This is the hurdle, if you get this. The numbers next to the items are changes, not balances.
Right.
So if I see accounts receivable and it's got minus 200,000 next to it, it means that accounts receivable used 200,000, consumed $200,000 worth of cash. So if I made a 200,000 profit and I $200,000 of consumed cash by accounts receivable, my cash didn't go up or down or anything else.
Yeah, it
right?
stayed the same.
So the accounts receivable, the balance next to accounts receivable is a change.
Correct.
Okay. And I'm going to throw this in and then we'll quickly drop it. But for accounts receivable, a negative number means accounts receivables went up.
Which is not good.
Well, right, which is not good, but it's people that confuses people.
Right.
You mean a negative means it went up? Yeah, because accounts receivable going up uses cash, which is a negative number.
Right.
Okay, we don't need to jump into that too much.
No,
All you need to do is just say, hey, there's a minus 200,000, which in my business is a big number, and it's the next accounts receivable. What the hell? It just, if nothing else, it just says, here's one of your major cash consumers, accounts receivable. Well, you already knew that.
Yeah.
But now you really know it.
Now you see it.
Now, what can I do about it? And then we get off into business management, like speeding up collections and listening to her.
And I think that's a big
podcast.
point is, you don't have to understand it to use it. And I know you talk about that a lot. It's not that you have to understand exactly how this works. You encourage people just to look for the big numbers, right?
Just look,
Whether they're positive or negative.
When in reality, it's a little bit confusing just by there will be a lot of items on there. And some of them you won't even know what the hell that is.
Right.
It'll say FICA due and payable minus. And you're going, well, wait a minute, that's my payroll taxes, and wait, it's a minus. So with what? Well, it means that they went up, right?
Right.
And that's just because they're sitting there until your CPA comes, takes them out of your account. Don't worry. Just look for the big numbers.
Right.
Positive or negative. And it'll tell you where your money came from and where it went. And usually it's going to be things like buying equipment, or it's going to be buying assets, or it's going to be, oh yeah, I forgot I paid off that operating loan that I had.
Yep.
But it'll tell you where it went. And when you find big numbers that are going against you, go in there and figure out how to improve it.
Yeah.
And that's really how you use it. It'll begin to, and you don't have to worry about anything else.
Yeah.
Just look for the big numbers. And if they're negative, go fix them.
Mm-hmm. And I think you have some really good examples. I know one of them is with draws. People not realizing until they look at the statement of cash flows that, oh gosh, I've taken a lot of money.
Well, that's, I had one client who had some serious, it was a lady. She asked me, if I make so damn much money, where is it? And I said, well, there are only 3 reasons. I said, you haven't been paid yet? Do you have a bunch of accounts receivables? She said, no, in my business, we have credit cards on file. And when we finish the job, we run them. So virtually none.
Yeah.
I said, well, have you bought a bunch of assets or paid off a bunch of debt? She said, well, I don't have any debt except my credit card, which pay off every month. And the only assets I bought is a few vehicles. I said, okay, then if you make money and don't have any, you must have taken it. She said, oh, no way. So I said, well, how much money did you take last quarter? She guessed in the $1,500, $2,000 range. This is about $1 million business sales. And so I said, well, let's look. Well, she keeps good books. So we got in there. I looked and I said, well, how about $18,000 last quarter? She said, no way. I said, yeah, way. And so we clicked in there and just, I'm going to say hundreds. I don't know if it was hundreds, but just all these debit card charges. I mean, to McDonald's, to the theaters, a couple of car payments paid. Anyway, just swiping the old card all the time. And to her credit, she was not trying to expense it. She called them draws,
Right.
which that's not a good way to do it. But anyway, she wasn't cheating the government. $18,000, she thought $1,500 too.
Yeah.
To $2,000. So $16,000 at least she had spent that she was unaware of because she just ran that company debit card and posted everything. So be aware, you have to have a more disciplined approach to taking draws.
Yeah. Really interesting. So, there's not a whole lot to go over. It's a lot more focused than all the other statements because you're just looking at cash.
It's just giving you information.
It's just giving you information on cash. And I think that this is one that probably a lot of people won't look at, if I had to guess.
They just go stinking print one.
And try it out.
Yeah, and actually in QuickBooks, unfortunately, I just said that at the top of the report is your beginning balance, and the next line is profit, and then all these numbers, and then ending. They put the beginning balance at the bottom, so it'll be upside down from what I said, but the same elements are there.
Right.
QuickBooks does that for some reason. But go print one out and look at it.
Yeah.
Just go look at it.
Go and look at it.
And just look for the big numbers and look next to that and say, how can I fix that?
Yeah. Okay, so really quick recap. 3 places that your money go, right? You either somebody owes it to you and you haven't been paid yet.
Right.
The second one is that you've spent the money, right? The other one is that
buying assets
or paying debt. And then the third one is that you've taken it, right? You've taken it as a draw. So really the one thing that people can go do is go print one out and go look for the big numbers and ask, what is this?
Right.
What's going on here? And just do some investigating on why that is there. Maybe you know, maybe you don't, but just look for those big numbers.
Accountant can tell you.
Accountant can tell you for sure.
Or you can call us. And the last thing too is be aware that it works the opposite way. Sometimes you wind up with an unexpected abundance of cash, and you need to know why that is.
Yeah.
You need to know why that is, because if you go spend it, think, well, that's good. You're doing something stupid and then find out you've got a bunch of obligations you didn't pay or whatever it was.
Yeah. Take a disciplined approach to it.
Right.
Yeah. Okay. Well, that concludes our financial statement series. 4 episodes. We did it.
Without numbers or math.
Without numbers or math.
Yeah.
It's good stuff.
We can do a lot more about how to use them, which I think that's kind of what a lot of what we talk about is how to use them.
Yeah.
To make better decisions and more money.
Absolutely. So, been great. We've got video now. It'll be only improving from here, which is good. Check us out on social media, doing great things. Yeah, Martin, keep your nose.
I'm learning how to use technology, keep my nose on the spit screen.
Yeah, check us out on social media, Instagram, Twitter, Facebook, LinkedIn. We're over all of it, and we are on YouTube. So make sure to go check us out and subscribe. We appreciate all the support and would love to hear from you guys. Reach out to us.
Any kind of questions you have.
Yeah.
We really value those so that we can be helpful.
Yeah, absolutely. If there's a guest that you want to see on the show, if there's questions that you want us to cover in a deep dive, let us know. So, Martin, thanks for your time. Thanks for being on the Cashflow Contractor.
Talk to you later.
See ya.
Thanks for listening to the Cashflow Contractor. Check out our website in the show notes or visit thecashflowcontractor.com.